Which is the best dividend stock to buy? Coca-Cola, Pepsi, or Keurig Dr. Pepper? I'm going to answer that question in this video looking at these three beverage companies, beverage and snack companies across several financial metrics. So let's begin starting with the dividend yield. Looking at these three dividend stocks, they're all offering a similar dividend yield between 2.8% for Coca-Cola and 2.2% for Keurig Dr. Pepper, with PepsiCo in the middle at 2.52%. So if you're looking for dividend yield as the major decision maker, they're all very close. So we're gonna need to look at more to make a determination here. The next thing I wanted to look at is revenue, and looking at annual revenue for the trailing 12 months. PepsiCo is the leader with 86 billion in in trailing 12-month revenue. Next, you have Coca-Cola at 43 billion and Keurig Dr. Pepper at 14 billion. PepsiCo thrived during the pandemic because of its snack segment. PepsiCo has a robust snack segment that thrived during the pandemic because we were spending more time at home, and the pantry's right there, the kitchen's right there. We're just walking over and snacking a lot more often. That was really good for PepsiCo. Also, it was good for Keurig Dr. Pepper. We had our Keurig coffee machines at home, and we were, popping in those coffees a lot more often when we're spending more time at home. So, uh, Pepsi and Keurig really benefited during the earlier stages of the pandemic. Coca-Cola is the one that's thriving right now. Coca-Cola's got a greater market share in away from home channels. Places like restaurants, bars, movie theaters, theme parks, sports stadiums. Coca-Cola has worked hard over the last decades in securing exclusive relationships with those merchants where you can only get Coca-Cola. And so now, as economies are reopening, Coca-Cola's revenue and profits are really bouncing back. So Coca-Cola is benefiting now, whereas Pepsi and Keurig benefited earlier on. The next thing I wanted to compare these dividend stocks on is cash flow from operations to sales. This measures how good they are at turning sales into cash flow. Looking at this metric, Coca-Cola is the best here at 25.62%, ahead of Keurig Dr. Pepper at 20%, followed by PepsiCo at 12.51%. And PepsiCo has been trending downward since 2017 in this metric, whereas the others have been moving upward over the longer term. Another metric I wanted to look at is the operating profit margin over the trailing 12 months. And again, Coca-Cola dominating in this metric, 28% compared to 19.8% of Keurig Dr. Pepper and 12.87% in PepsiCo. And also Coca-Cola's trend is looking much better than its rivals in this comparison here. So finally, I wanted to look at their valuation to determine which one of these is the best dividend stock to buy right now. And surprisingly, Coca-Cola is cheaper than PepsiCo at a forward price to earnings at 22.4 compared to 23.1, and Keurig Dr. Pepper much cheaper at a forward price to earnings of 18.23. So all things considered, especially with the increased benefits to Coca-Cola from the momentum in economic reopening, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would say Coca-Cola is the best dividend stock to buy right now out of these three. Coca-Cola had a better operating profit margin, better cash flow from operations, and it's got the better near-term tailwind in terms of the economic reopening, people spending more money and time away from home, and that's going to be a tailwind for Coca-Cola. So for all those reasons, I would say Coca-Cola is the best dividend stock to buy out of these three. Now, I've hand selected a video I think you'll enjoy. It's popping up on your screen right now. Right here, I think. No, right there. So please click on that. I think you'll enjoy it, and I'll see you over there. Thank you so much for watching.